If you're new to this channel, this is where we talk about property investing, share smart investing strategies, and anything property related. So if you haven't already, make sure you hit subscribe, smash that like button. All right, now let's get into today's question. And Hector's question is, with interest rate drops occurring, why doesn't Ripehouse appear to talk about buying properties within the Sydney market? Good question, Hector. Let's get into that one, unpack that a little bit further. I guess, firstly, that the reason we're not buying in Sydney is because I hate Sydney. No, but in all seriousness, why would I invest in Sydney when it's just an inferior version of Melbourne? But again, that's not the truth. I guess the big thing there, it's not that we're anti-Sydney. If we take a look at growth rates, Sydney hasn't really been terrible over the last 20 years. We've got Adelaide's been the best performer, followed by Hobart, then by Brisbane and Perth. That's data from June 2024. So I would envision that Brisbane and Perth are potentially sitting at the top three and pipped Hobart by now. But we see Sydney not too far away as well. But I think that the big thing to keep it in mind when we're talking about that Sydney market is your properties aren't really in the affordable price bracket unless you're getting into the apartment space, which that's overcrowded, overpopulated. There's not really been a whole heap of apartments that have performed well in Sydney. There's always some exceptions, your penthouse or your lifestyle type apartments by the water, but your cookie cutter apartments, they've performed terribly. They're going to continue to perform terribly. But I guess the big thing, the reason why we don't purchase in Sydney is just purely based off affordability. Most people don't have the servicing to go out there and buy a $1-2 million investment property. And then on top of that, throw in the affordability from managing the cash flow on that, because you're going to be getting something like a 2 to 3% rental return on that $1-2 million property, right? So, but if you were interested in going out there and investing in the Sydney market, I'm happy to kind of disclose like which areas are sitting kind of high on our R score, the Ripehouse algorithm score. I just, full disclosure, from a Ripehouse R score, 80% of locations will fail the manual checks done by our research team. But what's sitting high on the R score is we've got some LGAs like the Sutherland Shire, Blacktown, Ryde, Liverpool, Parramatta, the Hills Shire, those suburbs of Port Hacking, Stanhope Gardens, Acacia Gardens, Tennessee Point, Miller, Winston Hills, East Ryde, Beaumont Hills, Bella Vista and Ashcroft. They're sitting kind of the top 10 suburbs right now from an R-score perspective. But the reality is, like I said, the rental returns are poor. Most of the price points in those suburbs that are listed, $940 in Ashcroft, $870 in Miller, but that's rolling data. Those markets are moving. I would probably say closer to $1 million in Ashcroft, probably close to the mid-9s in Miller. But the highest rental return we're talking about there is 3.5%. So even if you're going out there, you're getting a 6% interest rate, you're talking about 2.5% is going to be the gap there that you're going to have to pay, but then you've still got your costs operating on that. So it's, I guess for your question, Hector, it's not that we're anti-Sydney. Where our clients who their affordability and their budgeting come into play, it just doesn't align on that side of things. So I do expect to see some good growth and returns from the Sydney market. Do I think it will go out there and perform 20, 30% like you saw in Brisbane, Perth and Adelaide over the last few years? No, because that's a phenomena that just kind of popped up off the back of COVID and some other factors all bubbling away. It's not a normal thing you will see in property investing cycles in general very often. But the market still looks strong, but you've got to be able to afford and weather that storm. But thanks for your question, Hector. I hope you liked today's video as well for everybody watching. If you haven't already, make sure you hit subscribe, smash that like button, and we will catch you on the next one. Bye for now.